Ladies and gentlemen, good day and welcome to Garware High-Tech Films Limited Q4 FY'24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vikas Sharma from EY LLP Investor Relations. Thank you and over to you, sir.
Neerav. Good morning, everyone. Welcome to the Q4 and FY'24 earnings call of Garware High-Tech Films Limited. On behalf of the company, I would like to express our gratitude to each of you joining the call today. To discuss the performance of the company and to answer the questions, we have with us from the company Mr. M.S. Atsul, Director Technical, Mr. Deepak Joshi, Director of Sales and Marketing, Mr. A. Venkataraman, Senior President, Corporate Affairs and Finance, Mr. Pradeep Mehta, the Chief Financial Officer, and Mr. Sunil Wadekar, President of Corporate Affairs and Finance. Before we begin, I would like to draw our attention to the fact that today's discussion may contain forward-looking statements that are subject to various risks, uncertainties, and other factors which will be beyond management's control. We kindly request that you bear in mind that there may be uncertainty in interpreting such statements. Please note that this conference is being recorded. We will now start the session with opening remarks from the management team. Afterwards, we will open the floor for an interactive Q&A session. I would now like to invite Mr. Deepak Joshi for the opening remarks. Over to you, Mr. Deepak.
Thank you, Vikas. Ladies and gentlemen, good morning and thank you for joining us today to discuss Garware High-Tech Films, that is GHFL, financial performance for the quarter and full year ended March 31, 2024. Let me start by providing a brief overview of our financial standing. We are excited to share GHFL's exceptional results, showcasing our commitment to growth and profitability. We have reported the highest ever revenue of 1,677 crores for the full year and a record high PAT of 203.3 crores, surpassing the 200 crore milestone. The key driver of this success was our PPF and SCF businesses, which experienced remarkable growth, which is slightly offset by the IPD segment due to industry-wide excess capacity. Let me briefly explain the performance of our main product lines. First of all, I would like to talk about paint protection film. PPF continued to deliver robust performance, operating at optimal capacity. The PPF business achieved a 3 times revenue growth in Q4 FY'24 compared to Q4 FY'23. We foresee strong traction in both international and domestic markets. To meet future demand, the board has approved rupees 125 crore in capital expenditure to establish a new PPF line with a capacity of 300 lakh square feet per annum, which is expected to commence commercial production by Q2 FY'26. The decision to take this line was primarily because our lines were running at optimal capacity, and we have introduced complete range of products like PPF Plus, Premium, Titanium, Matte, Black and White. This is to cater all segments of customers. With this capex plan and debottlenecking and the introduction of full range of products which we just discussed catering to all customers, we are confident in maintaining this growth momentum for PPF business. Let me talk about solar control films. Our SCF business surged by 67% in Q4 FY'24 compared to last year, fueled by a combination of factors: favorable global economic conditions, expansion into new markets, and the introduction of innovative products like Spectra Pro, Decovista, and Rooftop series. All contributed to this growth. We are also actively driving the sales through increased participation in exhibitions and distributor conferences, along with a strong focus on digital media penetration. Looking ahead, We anticipate robust demand growth for both automotive and architectural film segment on a global scale. As a special mention, we have created a new business segment with the new team to take architectural business to highest possible levels. We have strengthened our team in various geographical locations as well. Let me talk about industrial product business, where shrink film and other specialty IPD products exhibited steady growth, partially offsetting the decrease in commodity and packaging business. At Garware High-Tech Films, we remain dedicated to manufacturing superior quality products backed by strong R&D and improving our distribution network worldwide and solidifying our position in the global value-added film industry. We are confident in continuing this growth momentum and remain committed to delivering strong top and bottom line results. With this, I now request Mr. Pradeep Mehta, our CFO, to take us through the highlights of the financial performance. Over to you, Mr. Mehta.
Yeah, thank you, Deepak, and a warm welcome to everyone joining us today. I am delighted to report this quarter with highest ever profit and robust operational performance. For the full year, revenue stood at 1,677 crore, increased by 16.6% year-on-year, supported by continued growth momentum in the PPF and SCF business. The company is doing good in terms of PPA. Significant jump has seen in the PPF business. The deployment of additional sales force in new geography territory contributed to revenue increase in the SCF business. The IPD business showed sign of recovery in the last quarter and is expected to continue this trend going forward. For the full year, EBITDA stood at rupees 321.1 crore, up by 19.2% year-on-year basis. However, this growth was partially offset by lower volume and margin pressure in IPD business. Along with this increased sales and marketing expenses, PAT stood at a historically high of rupees 203.3 crore, that is up by 22.4% year-on-year basis. For quarter 4, revenue stood at 446.6 crore, recording a sharp increase by 28% year-on-year. Strong sales and marketing efforts led to a substantial increase in PPF business. The architecture segment of SCF witnessed high growth with the introduction of new products. For the quarter, despite increased sales and marketing and other expenses, EBITDA stood at 89.7 crore, up by 27.5% year-on-year, and PAT stood at 57.8 crore, up by 34.2% year-on-year. Approximately 78% of our revenue in FY'24 came from export and around 89% from value-added films. This positioning us for superior growth within the industry. I am pleased to report that beyond our impressive quarterly growth, we maintain an exceptionally strong financial position. Our balance sheet boasts zero net debt and a healthy cash reserve of 388 crore. The robust financial standing allow us to confidently invest in future growth opportunity, such as upcoming capital expenditure for the new PPF line. Furthermore, we have witnessed significant improvement in key financial metrics as well. This year, we achieved an impressive ROCE of 21.08% and ROE of 15.87%, excluding the evaluation reserve. These figures demonstrate our efficient utilization of funds generated by our business operations. Additionally, our effective working capital management practice have kept our working cycle at just 8 days for FY'24. This reflects our ongoing commitment to operational excellence and efficient cash flow management. In conclusion, at Garware High-Tech Films, we are committed to offering value-added products with a customer-centric approach and a strong product line, which have driven our PAT about 200 crore for the year for the very first time. Now we are confident in continuing this growth momentum and remain dedicated to deliver value to our shareholders. Thank you for your continued support. Let us now proceed for Q&A session, and I hope you have seen our earning numbers as well as investor presentation, which is uploaded on the stock exchange. Thank you.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking the question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask the question. The first question is from the line of Rahul Jain from Credence Wealth. Please go ahead.
Hello, am I audible?
Yes.
Congratulations team for a wonderful set of numbers, and post a wonderful quarter 3, we have done much better in this quarter with improved margins. So sir, my first question is with regards to the growth driver in this quarter, which has been the SPF. So SPF, we have reported almost about 190 crores of sales in this quarter, and this is the highest in last 8 quarters. We generally had a run rate of about 155 crores. So this quarter, this has really jumped up sharply. So one, what has led to this growth? And based on this quarter, how do we look at the next 12 months to come? Can we maintain this so-called 180 to 190 crores of quarterly run rate, or how do we grow further from here?
Yeah.
This is my first question.
Thank you, Mr. Rahul. As we discussed in last couple of investor calls, that the growth of PPF, growth of Sun Control, there was an issue of inventory, which was like after COVID, it went too high. And then there was a time in last almost 3 quarters to that got streamlined, that got offset. And we always gave a guidance that this business is number one business for us, which we are like world leader in this business, and our growth in this will continue to happen. So there, now this quarter 4, we have seen all the demands which was there. I mean, we are tracking the secondary sales as well. So that was at a good pace in the last full year. And Q4, like when the inventory got rationalized, that partially it started coming back from Q3. And Q4, it was fully recovered. So we continue this growth momentum because now the excess inventory, the phenomena which was there is not there. So we have and we are seeing this growth from all around, USA, Europe, Russia, China, Far East, Middle East, everywhere the growth is coming. And we expect a good show going forward from here.
Sure. So can we expect this run rate of 180, 190 crores on a quarterly basis to remain and probably grow further from there in the coming quarters?
Yeah, I can't exactly give that number, like is it going to be 180, 190 or something, but the steady growth will be there from here. So that is we are seeing our commitments and our efforts in that direction, and we are fully aligned that our customers are also aligned to these kind of order books from going forward.
Sure. So and on PPF, we have done exceptionally well in this year, clocking almost 450 crores of sales. So going forward from here, because your presentation mentioned that the PPF business has stabilized in quarter 4 or by quarter 4. So quarter 3, we had a substantial 160 crores of top line, which is in quarter 4 is around 109 crores. Obviously, it is not right to look on quarterly basis for the business. So my question is basically from 450 crores annual basis, what could further drive the growth going ahead in the PPF segment?
PPF, the growth, if you see world over, the people are really appreciating the PPF business, and there is a lot of enthusiasm about for the further penetration, which is like 10 to 12% in advanced countries, primarily because it is increasing the aesthetics and it reduces the maintenance of the car. So if you see those markets, that's growing, that is expected to grow at a CAGR of 6.5% from 2024 to 2030. So we expect a strong growth in overall PPF business. And if we talk of India, when we started, the market was like penetration was 0.5% only. As we speak, it has crossed 1.5%. So, I can say that all the efforts which we have put in sales and marketing and participation and customer awareness, along with the digital media support, we have been able to achieve this kind of growth in India, which is primarily driven by, as we proudly say, is by Garware High-Tech Films, right? So now when we talk about our company in terms of participation, these growth drivers, which is going to happen in world over and Indian market, we are like in advanced level of discussions with many new customers, and we hope that the kind of growth we have seen, it will continue, right? And so line is optimally loaded as of now, and plus for further growth till the new line comes on stream, we have planned like debottlenecking of one of our existing line, which is we have debottleneck to cater the market demand for going forward.
So on the domestic front, both SPF and PPF, as you mentioned, we have worked very hard, more so in the marketing side, creating awareness also for the new sun-based film for auto side and architectural films. So, sir, given also that the number of gas channel partners from March 23 of about 65 stores, today we are at 126 stores. So, domestic business, where do you see this going? What is it currently, both SPF and PPF put together for FY'24? And say next 1 to 2 years, where do you see this moving?
Domestic, actually, if I bifurcate the growth story, so there are 3 segments. So I will speak first like overall growth, which the maximum growth we are expecting from architectural segment. As we mentioned, that we have made a separate dedicated teams and made separate products for architectural segment, because we have been in the past always been viewed as a company which is fully dedicated to automotive segment. With our efforts since last 2-3 years working, now we have full team which is dedicated to architectural segment, and we have launched many new products in that, which is Deco Vista series and Spectra Pro series, and some of the rooftop is also being applied in that segment. So with this, we expect a very good growth, almost double the growth on architectural segment. That's one we are committed to deliver in that way. Second is we expect a very good multiple growth in PPF as well. Of course, the run rate will come down now because the base rate was pretty low over past few years. We have done like 6 times, 10 times jump on like quarterly basis, and annual performance always has been multiple fold. So now the growth will be like 30-40%. Still, it will continue for 2 years, and after that it will go to 20%. So that's a very natural phenomena, because when the base was low, we really jumped very fast. So the number 2 growth will come from PPF segment. And lastly, on the kits which are allowed as per CMVR Rule 100, we are quite committed to sell the volumes based on the conformity of the government rules. But that business also has seen a quite good jump, which I can say 20-30% growth is coming from that segment also. So overall, we can put a very strong show, which we have done in last year and continued for next 2-3 years. This will continue, this will be maintained.
So just to understand this gas channel partners, I was looking more towards that. 65 stores existed on March 23. So probably some of those stores are more than 2 years old, and with enough marketing done and awareness created. Could you give a range typically for the oldest stores or the stores which are more than 2 years old? What kind of revenue a particular one store could be generating, and typically a 1-year-old store, how much that could be generating on a yearly basis?
Sir, I think the model, there is little understanding required on this model. These gas are not owned by Garware, right? They are the franchisee models where we just support them to grow, to stand on their own feet. So, like to give them more support, because gas was like, they need much more to do to survive on its own. So, we have done a product launch which is called Titanium, which is a top range of the product. So that Titanium product is only available to Garware Application Studios. So even the company has changed some kind of strategies to actually our model was, if you know, that we sell to distributors and they sell to dealers, and then they used to sell to gas or direct detailing centers. So to support the Garware Application Studios, we have launched a product, this Titanium, which is top of the top rolls, but only given to gas. So whatever requirement 1 to 5 rolls are being done by that, we are directly servicing them. So that has, like, the sale of that product has done really good, and it's like a product which you can compete with the best of the best. I'm saying, if you talk of the market prices, starting from 2 lakh, 1.5 lakh to 3 lakh. So these kind of, their products are really good, and the value to gas owners are really good. So we support them by giving such kind of special schemes, right? Product at a different pricing, special product to them, which is not available in the market, so on, so forth. So we are committed to make them successful. However, they are not owned by Garware, so we do not look into their P&L.
Thank you very much. Rahul Jain, sorry to interrupt you. May I request you to come back in the question queue for a follow-up question? Thank you. A request to all the participants, kindly restrict to 2 questions per participant and join the queue again for a follow-up question so the management can address all the participants in the queue. The next question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Yeah, thanks for the opportunity and congratulations for a good set of numbers for the Q4 as well as the full financial year.
Can I request you to talk a little louder, please?
So, congratulations for a good set of numbers. And so my first question was on the PPF front. We have seen that the market leader in the segment Excel has actually reduced its guidance for the current financial year, and they have been talking about some headwinds that they are facing on the US market as well as on the China market front. So what are your views and how do you see this impacting us? And are we confident of PPF growing at 30-40% in FY'24 as well, FY'25 as well?
Yeah. So to answer your first question, like guidance given by a particular company is for a particular market, and their results, I believe, are impacted by that. But if you compare our results, because we are talking of the same quarters, so you can see the difference that we are not at all affected by whatever is given by a particular company, right? So we have a very distributed sales. Even in US, we have multiple channels of sale, and our growth comes from other regions as well, quite strongly. So in all likelihood, we are not affected by particularly a particular guidance given by that company. So that is one. Second thing is on PPF, definitely we expect a growth of guidance. Actually, that is not very firm because of so many factors going up and down. But we will continue our growth momentum, which is with the new line we have got some kind of I would say projections given by customers and by our team, and which we will cater before the new line comes. We will cater through our old lines and some fungible lines, which has been the bottleneck to make the market requirements. So our growth story will not be impacted by that, and as clearly evident by the results of the same quarter for both the companies.
Sure, sir. So my second question was on your guidance of 2,500 crore that you had given in terms of revenues in FY'26, I suppose. So that guidance remains, or any changes?
Yeah, we are on track towards that.
Okay. And the last question was on the Sun Control Films front. after like long time, we have crossed 160 crore kind of revenue run rate in the current quarter. And as you're saying, the industry for sun control films or the demand for sun control films has turned around. So given we are a very large player in the segment, do you think we can have 20-30% kind of growth in FY'25 for sun control films over FY'24?
Yeah, over FY'24, definitely. As I said, there has been an impact of inventory which has gone. And plus our efforts, as I said, like from all around, and we have added a team everywhere, including some new geographies. We have added expats into the team, and they are leading it to the further territories. So we are actually reaching out to new customers and new territories, and the growth seems to be, the forecast seems to be quite good. So we are confident of achieving that.
And any outlook on the IPD segment? Shrink segment has bounced back in the current quarter after, the impact that we had seen in last 2 quarters. So we have come back to a run rate of around 55-60 crore in this quarter. So how do you see growth in this segment?
So growth on, first of all, it's a little seasonal business, shrink business. So during the peak heat, it will definitely go to the top of the level. But the countries where we sell a lot of product for the dairy segments and to North America and Europe, so that growth will continue. And over the years, many players tried to enter into that business, but our position has been reaffirmed by the market participants because of the quality and the continued consistency in our quality. So that momentum will continue in that. And overall on IPD segment also, we are expecting a bounce back, but not that strong like it will jump from, but definitely from the level of FY'24 this year, we are seeing a good momentum as we go on into that business. So that business, because of there are a lot of rationalization happening into the market, so we expect with our product line, which is specialty segment, including shrink, we are seeing a good bounce back. And overall also, though we do not participate in packaging or commodity business, but we expect that is also getting stabilized and slightly showing upward movement.
Thank you, Nisha. I'll come back in the queue. Thank you.
Thank you very much.
Thank you very much. Participants kindly restrict to 2 questions per participant. Next question is from the line of Sanjay Shah from KSA Securities. Please go ahead.
Yeah. Good morning, gentlemen. Thanks for opportunity. Sir, congrats on excellent numbers. And I would not hesitate to even appreciate the presentation which you have shared. It's very nice, sir. Very detailed and very helpful, sir. So just to elaborate my understanding, we are putting a new capacity in PPF with a capex of around 125 crores. So what asset turn we can expect? Can it be around 3.5 times as per our understanding?
You can see as on date we have asset turnover is around 2 times, excluding the revaluation reserves. This would slightly move up in the coming year. So depending on the sales what we are projecting in 24-25. So to answer your questions, yes, we expect some increase in the asset turnover ratio in the coming years.
Sir, our new launch that is...
Sanjay, sorry, can you speak a little louder, please?
Yeah, sorry. So, sir, our new launch of titanium PPF, how is that product? Have we launched that internationally, and what response we are getting into it? And also the question on PPF was regarding our entry into Tier 2 cities. What is the response from there?
Yeah. So, like as a strategic growth in PPF, our base was pretty low. So first 2 years we did sale into a segment which was mid-range segment. Then we entered into little economy kind of section with a plus variant. So initial it was a premium, which is running really well, which is the major market share. And then we launched Plus, which is a variant where people cannot afford somewhere like lakh rupees or so. And then after that, with the market demand, because our quality runs really well on the countries like USA and like Europe. So then we made this product, which is very different from the other products, which is like, there is actually, it's a bit technical, but I can explain that. It's like it is much whiter or cleaner, I can say. You can see the gloss of the car increasing pretty quickly. Its application stretchability is wonderful. It's kind of non-yellowing, and it has got a lifetime warranty. So with these, this is like a top of the top product, which comes with all competitors. So with launch of this product, we have a complete range from the very basic level to the top of the top range, and all products have been categorized in terms of their their technical capabilities, their specification, and of course their warranties, which is like starting 3-year, 5-year, 8-year, and lifetime. So based on that, this has been launched. So this was launched very recently. I can say it's not even 2 months, and we are getting a very good response because this is a gas-specific product. That is only Garware. It is sold through our application studios only. So that's why it's kind of limited version at the beginning. The reason not to distribute it, we just wanted to segregate our position. It's a branding product basically, which is being sold to create a brand awareness of Garware, not create competition amongst our participants. That's a dealer, distributor, and everyone. So that's why it's very unique in its nature, and it's growing very good. And after its launch, when we said it's a lifetime warranty, we got inquiries from South America, Europe, and some inquiries from USA. We have not yet launched into that market, but we will soon think of doing that.
Yes. And sir, response from Tier 2 cities in India.
Yeah, okay. So to answer that question, we have like 2 weeks back, if I'm not wrong, we launched, we made 4 Garware application studios, 3 in Lucknow, 1 in Kanpur. And in next 2 months, there is a plan to open 6 to 8 Garware application studio. These studios, as I said, is not owned by Garware. This is like people who want to be associated with Garware brand. They are requesting us. We are doing evaluation, and we are seeing the potential. And based on that, we are awarding these studios to them. So with the response of Lucknow, Kanpur, and all those kind of tier 2 cities, we are getting a very good response. And the growth, next line of growth will come from there.
Yes, yes. So my last question was regarding our new product of Deco Vista series. Can you give us some highlight on that? Thank you.
So Deco Vista series is a decorative product which is used by commercial and residential, where it is interior partitions are required. So we had yesterday night we had a conference of our regional west regions dealer and distributor meet, which was like headed by our architectural head in India. So I was also present. So we showcased these products. So what we are doing now, we did in first Delhi, then Chennai, now in Mumbai, and we will go all around to showcase the product and its properties, live demonstration on that. So these products are, as I explained, these are decorative films, but they come with lot of options with that. I mean, there is a safety film involved in that. So that is being used by many hotels and in shower cubicles and all, which they have seen in the past kind of accidents when they open. You go to a 5-star hotel, and when you open a shower cubicle, if it goes very fast, it touches the wall and breaks, and that is harmful for guest in the hotel. So all those things, I mean, this is only one example I'm giving how deep we go, but there are many such things which our team is going and promoting, and people are liking these products. So this comes with a decoration and safety in one product. So that series is called Deco Vista, that is decorative.
That's great, sir. Thank you, sir. Very helpful, and good luck to you, sir.
Thank you very much.
Thank you. A request to all the participants, please restrict to 2 questions per participant. Next question is from the line of Rohan from Total Capital Management. Please go ahead.
Hello.
Hello.
Am I audible?
Yes.
Yeah. As we can see that our guest studios, the network has increased twice, and as well as OEM network has been increased. So can you give us a explanation regarding what kind of consumer behavior change we are seeing? Because now we have sufficient reach. So are people willing to spend behind PPF or window films?
Yeah. See, a window film, if I go to their categories, they are very different. Window film is not that expensive. In a way, it's a very premium product. Our products are. But the cost, if you talk, is very different, whereas PPF is in the multiple and it can go into ₹1 lakh for a car, right? So for PPF, there is a different kind of, efforts are required, and people are appreciating that. Gas is basically area where mainly PPF is promoted, right? So with the increase of our strategy is now, as I said, we went into a middle segment, then to a lower segment, now completely on the top cylinders. We are completely made products as per the market requirements, which is catering to all kind of customer segments, right? To add it to that, we have matte PPF, we have black PPF, we have white PPF, and that will go continuously. Our R&D team is continuously working to give a great experience to our customers. Now, when we talk, there are many people who are very, also passionate about their cars. So there it's maintenance and aesthetic value increases. I can't name the celebrities, but we have done almost, in Bollywood and then in sports and everything, we have done multiple people using the product and giving a very, very great feedback to us. So that's one. And when we talk in the tier 2 cities, I gave example, I'm sticking to that example because I can't name every city. So Lucknow and Kanpur, we are these kind of cities. This is an example. We can take Raipur, we can take Nagpur, and all those cities. We are putting a lot of efforts, and people are really appreciating and giving value. So to that, because if you talk of how the pattern has changed, like I said, when we started, it was 0.1%, 0.2% penetration. Only 300, 400 cars were being done in India. As we speak, the number has increased to 1.5 to 2%, and in car terms, I think it has gone to multiple thousand levels, right? So the pattern has changed with sustained marketing efforts and keeping people's mind that this product is something which is a value for its money, right? The scratches in the mall or anywhere, wherever you get these kind of things, and you can get rid of these kind of things by putting a PPF, which is comes with a great name like Garware kind of quality. And second thing, on sun control, we have been a very strong player, but our focus was because of capacity constraint 2-3 years back. We were mainly focused on automotive. Now the shift has changed. Automotive, definitely we are doing great, and we'll continue to do so. But we have put another effort toward architectural segment, like I just explained with the introduction of new products that market is growing. But at the same time, it gives a lot of value to many malls, commercial spaces where energy saving is there. So you can see we have the energy calculators whenever we talk to those decision makers in big malls and commercial buildings. They are really excited to know that there is a product which is made in India, which can compete with the number one, number two, who have ever been there in the world stage. And our quality definitely is either at par or better than them. So our value propositions are really great, and that is being percolated to market, and we are quite confident that it is going, because we have seen the results in last 2 years that we have been growing, but with the sustained efforts like a team addition world over and an entirely new team created in India, so that is making a big impact.
Okay. And another question is regarding what kind of revenue we are doing per gas store, like we are supplying to them. So what kind of revenue we are doing per gas and as well as per OEM dealership?
So when we talk of there are two segments per OEM, as we have it seems that more the gas partners are continuously increasing. But as we said, we don't go into each and every P&L, because if you talk of 200 people, then it's not in the interest because it's their stores. We are just providing them support from our side. But the overall, that gives, we can see the numbers since beginning. Now the numbers are almost doubled on all the gases which are there for a couple of months. And titanium is giving them a big edge. So their earning is increasing. But specific number, we have not yet done, because this is not into our, this is their gas, so we do, and it is not owned by us, so we don't go into their statistics.
No, I get that. I'm not asking from their point of view. I'm asking amount of what you are selling to them. Like the
so if you talk of I'll just, when they started, like the older ones, when they were buying in a month, they were able to do 4 or 5 cars. Now all of them are jumped 15, 20 cars a month, right? So if you see 200 people, then you multiply with all those numbers, that numbers is quite increasing. That's our strategy actually to grow. We are creating our market by creating a secondary market. We are not pushing our dealer distributor, but we are creating a market from the ground. So that's why we are seeing these kind of results.
Okay, so this was for the gas, the 4 5 cars to 15 to 20 that you are doing right now per month.
Yeah.
And what's for the OEM? Like if you can share some ballpark number.
See, for OEM, I think it's a kind of I would say it's some information which is very strategic and confidential in nature, because we have seen I'll just give, it's quite open that the company is really doing good overall, and there are our peers, competitors who are coming out with lenses what we're doing great, what can be done. So that's why we are restricting our strategies to our top level only, right? But I can assure you, OEs, we have the one which has if they were buying 100, 200 to start with, they are again 400, 500 kind of numbers, and that numbers will increase. And we have now more OEs with us, but again, we can't share the names because of the confidentiality.
Okay, completely understand. That was from my side. Best of luck for it.
Thank you. Participants kindly restrict to 2 questions per participant. Next question is from the line of Puneet Mittal from Fort Capital. Please go ahead.
Hi. Thank you for the opportunity. First, a data point. What was your overall growth in the SCF category this year?
We have shared in the presentation. Just a second. To be precise, we are just looking at the presentation. We know that. Yeah.
Growth in SCF.
SCF, yeah. 67%, I think.
You are talking on quarter-on-quarter?
Sure, you are talking of Q1Q basis, right?
No, I'm talking about full year.
Full year?
20. Yeah.
Around 67. Yeah, 67%.
It was 67%.
Now, like the data.
Puneet, sorry, your voice is not clear. Can you speak through the handset?
One second.
So he's asking for you.
Hello.
The full year growth is around 3% on Sun Control film business. And earlier number was quarter-on-quarter. Means if you compare on Q4 FY'24 versus Q4 '23, there is a significant growth.
Okay. So,
See the reason I'll just explain. As we said, we are back. Q3, the inventory impact went away, and Q4 we are back with what we expected. So that's why we have seen a 67% big jump into quarter versus last year quarter, right? And overall, it shows around 3% in the annual basis.
okay, but that means that we are in the traditional, like our older products of Sun Control film, we are still down because we have introduced new products this year, and that has also contributed to some revenue. So our traditional SCF business is probably still down. Is my understanding correct?
No. So that's what I was trying to explain, that if you see the Q1 and Q2 last year, it was really down on Sun Control, mainly because the inventories which we supplied the previous year, they were like almost 1.5 to 1.8 times what it was required by the market. That in fact you will have to go to kind of COVID areas when COVID times, when there was like shipping times from India to US went as high as 75 days from current 35 days, right? So a lot of inventory was on waters, and there was a scarcity of the product, so people ordered much more. This phenomena not only happened to us, it happened to Walmart, Costco and everyone, because everything was same, like everybody ordered from India, China, and the shipping time went as high as 75, 80 days, and there was a scarcity of material, so people ordered more. And as soon as the situation got corrected, there was sudden burst of material which was like say 40 days net inventory which was on water. It landed there. At the same time, the order which they ordered more in expectation of high demand, and at the same time of low supply from the supplier. Everything went there, and that actually the first 2 quarters went away to liquidate those kind of inventories. So that's why the order flow from our side remained low by the customers. So this situation kind of went corrected in Q3, and it came back with the full force in Q4. So that was the situation. Otherwise, the kind of like sales we have seen, it has returned, and it will continue in the same territories.
Understood. Thank you. Now the second question is, if you look at Expel, they were traditionally a technology company, and their biggest advantage still today is the software that they have, which has exact dimension and model of every car out there, and they are able to cut the PPF to the exact dimension for the car, which essentially is also why a lot of applicators use them. So Garware, since we are also selling our own brand name overseas and within India, in terms of this software or technology of how to use the PPF or cut the PPF to exact dimensions, what are we doing? Do we have in-house technology, or we are outsourcing from somebody? If you can just explain a little bit there, would be helpful.
Yeah. So we have tie-ups with certain companies in USA, because USA almost all the application are done with the plotter software, right? So that's why we have a tie-up with a company. So we sell our product with those software. So they have got almost the similar features what the other company Expel has. So similar features. So, but the revenues, of course, is whatever Expel is doing, that is with their software world around, and we have seen those revenues, right? So, Garware also, I mean, we are working on a couple of things in that. So, in coming quarters, we'll be able to give a detail on that. But we have the software, and we are using that to our advantage.
And you are using the same software in India?
Can I request?
I'm just sorry.
It's okay. He can ask. Yeah, please continue.
No, I'm just asking the same, whether using the same software in India as well.
So we are using some of the pre-cuts for some of the markets, some of the particular vendors in India, and it will be commercialized very soon. I mean, it's on a low scale, but we are doing, because pre-cuts help us to reduce the time and the cost of the product.
Okay, got it. Thank you so much. Thank you for all the...
Thank you very much. Participants kindly restrict to 2 questions per participant. Next question is from the line of Mahesh Bendre from LIC Mutual Fund. Please go ahead.
Hi, sir. Thank you so much for the opportunity. Sir, we are planning to spend, I think, 125 crores on the new PPF line. So what kind of revenue we are anticipating that whenever that come up at optimum level?
Yeah, it will be it's the same capacity, same line. So we expect the same revenues of 350 crore. But that takes first year it goes with a certain kind of capacity utilization, and 2 to 3 years it will go to full. So that's what the expectation is. So full scale it will go to around 450 crore.
Sir, even if you assume 350 crores of revenue from that whenever it stabilizes and 20% kind of margin, so ROC will be in excess of 50 to 60% in this new venture.
Mr. Mehta,
Yeah.
Can you repeat the question to Mr. Mehta? Yeah, please.
Sir, we are spending around 150 crores and we are going to generate 350 crores of revenue, maybe whenever 2-3 years down the line. So if we assume 20% of kind of margin in that, since it's a high valued product, so the ROC will be what? I mean, in excess of 50%?
No, it will not be like that. We will not comment on the margin side, but it will be not 50%.
No, I mean,
range.
Sir, out of 350 crores, whenever we revenue, even if we assume 20% of margin, 70 crores of revenue, profit, EBITDA level, with 150 crores of investments, almost 50%.
It will be, but going forward, yes.
Yeah, going forward. I'm not saying right now. Whenever that will happen, maybe 2 or 3 years down the line, we'll stabilize the situation, but this will incrementally the ROC will be very high in that case.
Yeah. Later on it will be high.
It should be. You are correct, actually.
Yeah. Sure. And sir, one question. I mean, last time also we discussed. I mean, our numbers and profitability growth has been, all things have been fine. Only our return ratios are depressed simply because gross block is high because of revaluation and all this stuff. So, is there any way we are planning to do anything to improve the return ratios going forward?
See, one is, as you rightly observed, the revaluation reserves is nearly, I think last call also we explained, is almost 765 crores. So that is why if you can take it, the turnover ratio has come down quite a bit because of that. But considering the profitability, considering the new investments that is coming up, we foresee a very good improvement in turnover ratio as well as the returns. But it will take some time. As explained previously, the PPF full utilization may take 2 to 3 years. So once these new investments start fetching the returns, we could see a considerable improvement on returns as well as on the asset turnover ratios.
Sure. And last question from my end. Sir, based on current capacity, Sun Control films and PPF, what kind of revenue we can generate from the existing setup?
Yeah, so we have given the guideline on full utilization basis. It's 500 crore from the new investment, and when it goes full, so it is almost running towards that. So we are expecting overall to go to cross like 2,000 crore for sure. And the guidance about FY'26, which we maintain around 2,500 crore.
Sure. Thank you so much, sir.
Thank you.
Thank you. Next question is from the line of Sriranjana Mittal from Ratnatraya Capital. Please go ahead.
Hi. Thank you for the opportunity. So I had two questions. One was on the PPF side. So if we see this quarter's run rate, sir, it's about 110 odd crores, which has come down a little bit from the last quarter's run rate, which was around 160 odd crores. So can you explain the reason for the drop? Like, is there some seasonality, or is it because initially you said we were adding some distributors, so the effect of which has now reduced? Can you just throw some light as to what would be the stabilized run rate, and what was the reason for the drop? Thank you.
Yeah. So actually in PPF, like everything, I think when we talk of these numbers, quarter on quarter, it's not the right judgment. See, what happens sometimes, more inventory goes. The orders are there for coming months. So if it happens like it got dispatched because of urgency and all those things, they make a little difference on that. But if you see, there was, of course, Q3 has been very strong on PPF, and Q4 the Sun Control has done outstanding by growing 67%. So the kind of this is the balance between these two, because some fungible capacities are being used for PPF. Now we need full for Sun Control, so we have shifted to other capacities, so which will start kicking in from the next quarter. So it's, with all likelihood, we are saying we don't lose any orders because of capacity, but there is always adjustment on quarter basis, like which business goes more, and there is this balance is there. So maybe, in PPF, typically we have seen Q2 and Q3, people tend to buy more because then the focus shifts towards PPF. And in Q1 and Q2, the focus is towards Sun Control. The reason is Sun Control is seasonal business, whereas PPF is all around, but the efforts and energy and the money which is put on PPF goes more towards Q3 towards time. Because this is basically handled by similar people, like the distributor are same. So they have to plan their inventory. Like if I talk of our distributor in India, so they tend to buy too much of Sun Control during peak season, because it is like the hottest selling product, whereas all the money or whatever resources they use for Sun Control. When it goes little down because of the seasonality, like rainy season, it will definitely go down. During that period, people tend to buy more of PPF and stock them.
Understood, sir. So there is some element of seasonality also. Understood.
Yes.
And the second question I had was on the architectural films also. What is the currently? What are the sales that we are doing in this year? Particularly, how much was the sales that we were able to clock?
See, we are trying to now restrict, for the competitive advantage. We have. We do not want to go into these segments in a very particular way, because as I said, the information is being closely watched by competitors and peers. So I can say that we have grown around 25 to 30% in FY'24, but this year we are taking a target of more than 50% growth in architectural segment. We have budgeted it that way. So overall, you will see a jump in Sun Control business, and that will be the portion of that will be from architectural segment.
Understood. Thank you.
That was untapped for us, so we are trying to we are putting all efforts toward that direction.
Understood, sir. Thank you. Thank you for taking the question.
Thank you very much. Thanks.
Thank you very much. Next question is from the line of Aman Saifi from iWealth Management. Please go ahead.
Hello, sir. I hope I'm audible.
Yes.
Yes, sir. So I just want to understand from the capacity utilization front, when you say that your new capacity will be commissioned in FY'26, and you are already at a optimum capacity utilization with the current capacity. So is it that this year there won't be any growth in PPF, or is it that your capacity is fungible across HPF and PPF?
Yeah. So our capacity is fungible on not everywhere, but under certain lines. So till the new line is commissioned, we have, debottleneck one line, which is able to produce beyond the capacity of PPF. So the kind of order flow will be there. It will be catered from there. And there is an impact of seasonality also when like sun control, like I just explained in the previous call. So that will be like, it's a combination of both because the selling point mostly are common. So that element works here. So we will be able to cater the demand, whatever comes from the market by fungible capacity. And looking into the current flow of sun control films, we will be till in the season, people will be more focused towards sun control films.
Got it. And sir, just one last question. As our majority of the business is on the export side, almost 70 to 80% of our business is export, are we experiencing any issue from the Red Sea impact, long delivery times or anything on the freight cost?
There is a freight cost increase, but that is very minimal. It is not like we experienced in 21 and 22 when COVID was there. So there is a marginal increase, and lead time has increased by 10 to 15 days because people are avoiding to go from from Egypt and Red Sea or something. They are crossing the sea and going there. So that has an impact of around 10 to 15 days. But that we proactively gave guidelines as soon as started to our customers that you may experience a delay of 15 days because of that, and slight price increase, which has been taken care of. So if you ask me the impact, I would say no impact for financial performance. Of course, there is a lead time increase which we have taken care of. So we have proactively started supplying to the customer so that they do not go out of the product.
Got it, sir. Thank you so much. That's it from my side.
Thank you. The next question is from the line of Bharat Mani from Moneybee Investment Advisors Private Limited. Please go ahead.
Hello. Yeah, hi. Am I audible?
Yes.
Yeah. So my first question is on the TPU side. So TPU, which is a major cost for the film, which costs around 75% of the film. So are you doing some kind of R&D for making it in-house, for further backward integration?
This is very sensitive information because, we have long-term contracts with our suppliers and all. Any such kind of information may lead to, it's very sensitive information which we will not be able to divulge at this moment.
Okay. So my other question would be, can you just tell me this quarter how much was the white label and the own brand mix?
White label versus our brands, right?
Yeah.
Typically, we keep it 50-50, but we saw a big jump from some big players, so we can say it's a 60-40, like 60% towards white box and 40% towards us.
Okay. And can you just give me the capacity utilization of the new lamination line that you have?
So new lamination line of if you talk of recent months, that is close to, I can say 60 to 80% it's going.
Okay. Yeah. Thank you. That's it from me, sir.
Thank you. The next question is from the line of Shreya Jain from Niveshaay Investment Advisory. Please go ahead.
Hello. Thank you for the opportunity. First of all, congratulations on a great year. I wanted to know more about the gas business model. Like, how does Garware gain from gas sales? Like, is it a fixed percentage or a fixed amount that we get? As you said, it was a franchise model, so how do we gain from every new store opening?
Yeah. So first of all, when we how do we get benefit is like recently whatever gases we have opened, so we get orders from them, which city. Like I'll tell you from the background, like how we were able to penetrate in India market. So the story was there were hardly any applicator into the market, and there were like 200, 300 rolls being sold by the top manufacturers in India. So practically there were no place where a PPF can be done. If you want to do a PPF in your car, how much you can afford is secondary. First of all, there should be a facility where you can do your PPF in an environment which is dust-free, right? With a clean room, we call it. And secondary thing is there has to be an applicator, which is very important because such an expensive product. And when we do that, you need the third parameter, which is if the car is not coming straight out of the showroom, then you have to remove like your handles, you have to remove some headlights and all those things. So this is very highly skilled job, right? So all three things make it a very difficult proposition if you talk of the operation purpose. So what Garware did is we have trained in over a period of time 700 applicators who are like our army into the market. Now, about the space and all, how do we do? So that's the advantage when it comes from gas. Like we have opened in a city like, for example, X city. So there is no application studio, there is no applicator, and there is no facility of doing the third thing, which is removal and fitment, right? So, and there is a buffing, polishing, everything, cleaning is also involved. So gas is a perfect location where we give our corporate identities and designs, like what they need to do, and we also provide trained people, like that salaries and everything is taken care by them, but we provide full support, and this model is increasing our sales to secondary and tertiary cities in a great way.
Okay. Thank you so much, sir. My second question was regarding PPG. So PPG had launched a technology last year which would integrate paint protection layer directly into the paint, and they will sell it to OEMs for automobiles. So, and it has been getting a good response. So I just wanted to know, do you see this as a threat to our product? Will this eliminate the use of PPF entirely in future maybe?
Yeah, but you have said it has got a good response. May I know what kind of good response it has got? Means has it been implemented?
Okay. Yeah, so according to PPC, they've been getting a good response. I just went through their website. So I just wanted to know that...
I'm sorry to say that because this was actually, there was a clarification, and I meet many people. I'm in US for next whole month, and I meet like go everywhere, meet people. And as per the market information, there is no such thing like a layer of paint which can be in fact, if you know, PPG also has a PPF plant which they produce and trying to sell more and more. So there is, as of now, there is no paint technology which can be directly applied to that. So there was some, I would say, as of now, it is not clarified by the sources like what it is. It is, the current status is there is no such product in the market.
Okay. Thank you so much. Thank you for the clarification.
Thank you. The next question is from the line of Sudhir Bera from Bera Family Office. Please go ahead.
Yeah. Good afternoon, sir, and congratulations on the solid set of numbers. And I must say that I'm a customer also and shareholder also. The products are very, very fine and very useful. Also, this company is now becoming a kind of FMCG company, I believe.
Thank you for your appreciation.
Sir, to the entire team. So almost all the questions are answered, I think, in previous all the questions. But one question that I would like to know. So is it a correct understanding that by FY'26 we are going to reach a 2,500 crore and more or less kind of EBITDA what we are clocking right now, that will also be, will be able to achieve.
Yes, we maintain that guideline for FY'26, and also with the margins, EBITDA margins are going to be stable at that number. We'll try to improve, in fact, as a company.
Great, sir. That's all from my side, and all the best, sir.
Thank you very much. Thank you very much for your kind words.
Thank you.
Thank you. The next question is from the line of Preet Nagarsheth from Wealth Finvisor. Please go ahead.
Yeah, I think most of the questions have been answered, but one remaining question, sir, is there seems to be a lot of cash on the books, and with the kind of money the business is throwing annually, that cash only will continue to grow. The dividend that got declared is, again, a very small amount, relatively speaking. So what are the plans for distributing this cash on the books? Are we looking at any kind of buyback down the road?
So actually what you said is right. We have cash of 388 crores on hand. So what we are planning is we have this capex plan, what we discussed, PPF, almost 125 crores. This year we need to spend 24-25. And as of now, we don't have any plans for buybacks and also any dividend hikes in the immediate term.
Yeah. So, but just to add to Mr. Venkat is that we are continuously, like we said, maintained last time, that we are really committed to maximizing shareholder value. So for that, we are seeing a lot of opportunities with the efforts we are doing, like Mr. Veda, prior to this your call, he mentioned that we are trying to become a FMCG. Actually, the idea is to penetrate every nooks and corners of India and make a kind of world factory with world-class products for the world, for the global market. So in line with that, we are again continuously looking for opportunities like the one which we have announced now. And similarly, we will be continuously looking to expand ourselves, but with a proper, due diligence and studies. So we are committed to that. So these all will be utilized in that way.
Sir, I agree with the growth that you are projecting here, but my point being that the business itself is now going to generate 250 to 60 crores of cash every year, and that's only going to grow. So that would be sufficient to take care of the expansion plan that you outlined at present. My only point being that the cash that you have on books could be better utilized by sharing it with the shareholders. That's the only point I make.
We are actually on that, like I said, we are evaluating opportunities also in the market, and we are ready for that. So we are actually, as we speak, we are evaluating many opportunities where we can grow, we can be inorganic, we can show inorganic growth also from the current set of what we have.
Got it. I see. Great. Thank you, and all the very best.
Thank you.
Thank you. The next question is from the line of Rahul Jain from Credence Wealth Advisors LLP. Please go ahead.
Yeah, thanks for the follow-up. Sir, with regards to this marketing expense, so basically you have mentioned in our presentation there's a nice slide with regards to, the EBITDA bridge. So for FY'24, there is a 28 crores incremental which has gone in the marketing side, sales and marketing. So two parts to it. One is, so total, the absolute number, if you can share what number we have spent on sales and marketing for FY'24. And what is the expectations or typically for the coming year, FY'25 and FY'26, what is the budget with regards to the marketing spend?
Yeah.
Sales and marketing.
So sales and marketing expense, like in the EBITDA bridge, it's quite clear that we have spent 28.3 crore, right? So that is the absolute number which we have spent. And on that, there was an advisory company who did a great job of working with us, right? So as we speak, the services are, till last quarter, till the quarter Q4, they were there. Now we are evaluating on that. So as a budgeted number, we have kept the same because we are trying, as I explained previously. So that kind of awareness, people are now viewing a company which is Make in India, but on certain segments we were not visible. Like say, for example, architectural segment, there was these kind of issues. So we formed like every month we are doing one or two big, meets there. We are participating on kind of architectural meets. Then we are putting our ads into digital media plus some home decor books also. So we are creating a lot of buzz there. So that's why we have kept our aggressive sales and marketing budget for this year. Another thing is whatever gas we open, we do aggressive campaign in their support, localized digital media support we give to them. So there are a lot of, I'm seeing there are hundreds of events which we are planning to do. So that's why sales and marketing is a big enabler for our growth. And we have kept the same numbers for this year as well.
Just to clarify, so 28-29 crores is the number for sales and marketing for FY'24, and we'll be somewhere at 28-30 crores for the next year also, correct?
Yes.
Okay. And so the second question is on the IPD division. So for last 4-5 quarters, IP division has not done well, and the margins or the losses over there probably have dented the overall margins of the company, in spite of a very exceptional growth on the specialty side. So if you can share in IPD division, typically what were the peak margins and what have been the somewhere probably this quarter 4 or the previous quarter 3, where it was at the worst level. If you can share some kind of ballpark range or, where which can have some understanding for us, and what are the normalized IPT margin?
Yeah, I'm sure, I know where are you coming from, but what happens is, for a company like which is mainly into commodity or packaging, there it's very easy to give the absolute number, right? But for us, since our product mix keeps on changing month-on-month basis, so there was actually, if I talk on absolute number for FY'23, it was 18.48. Sorry. Yeah. So on a say operations basis, gross margin was around 18.48%, which dropped to 17.88% in FY'24, right? But that is like a mix of product mix makes a lot of changes in that. So, what we have done, we have added changed some products, and we got some new avenues for us in North and South Americas, and where we are expecting this margin to improve even from the 23 level. So it is going better as we speak.
Sorry. So you are saying it was somewhere around 18.8 in FY'23, the gross margins in IPD division, right? Is that what you mentioned? And which fell down by about 100 basis points in FY'24.
The thing is, it's for because the numbers are quite mixed here, so let's not go into that.
No, I do understand. I'm just saying that I'm just trying to understand. So at peak level, say in FY'21, when company had a overall EBITDA margins of around 22% in FY'21 and 18.5% in FY'22 operating margins for the company level. Okay?
Yeah.
At that point of time, IPD was doing well, and specialty proportion was much lesser. So at that point of time, IPD must be doing what, 20% plus gross margin? Is that a correct understanding?
Yes.
Yes.
It was doing that level because across the industry it was there. But this, if you see, particularly it was not good in FY'24 level because of very huge overcapacity. Please.
I get that. So my question was basically going ahead, assuming, of course, we don't know, but assuming, say, maybe in FY'25 in the second half, or say FY'26 as a whole, the gross margins of IPD go back to, say, move up by around 2.5% or 3%. Then will the overall company margins also move up in the tandem, or will you use that additional profits from IPD division to probably increase your marketing spend and branding spend?
No. Actually, in marketing spend, we have already kind of budgeted. So whatever gain from IPD side will add to the value or directly to the company.
Okay. Oh, that's great. Thank you, sir. Thank you so much for the detailed insights, and wish you all the best.
Thank you.
Thank you. The next question is from the line of Harsh Mulchandani from Chris Portfolio Private Limited. Please go ahead.
Yes, thank you for the opportunity. Congratulations, team, on a great set of quarter and great year. And most of questions are already answered. I just have one question on capacity utilization. You mentioned that we are at optimum capacity utilization, and for PPF, basis the previous quarters, we were already at a higher level, and now seeing SCF also picking up. We'll still have an opportunity to debottleneck and manage the growth for the coming year, because FY'26 we'll see the capex for PPF. So just want to understand that we have sufficient capacities to grow 20-30% for coming year.
Yeah, we have headroom. Like we said, like in the peak season, currently we are running 60 to 80% on new lamination line. So there are, many, we have 5 lamination lines, and those lines are utilized based on the kind of product, right? So we have, as per our estimates, we have headroom to grow both in PPF and Sun Control before the new line, until the time the new PPF line is commissioned.
Okay, perfect. Thank you so much. Best of luck.
Thank you.
Thank you. The next question is from the line of Karthikeyan from Suyash Advisors. Please go ahead.
Sir, good afternoon, and many congratulations to the entire team for a very impressive performance through the year. Couple of clarifications, sir. Partly you answered this, but I just would like some elaboration on this. When we launched the PPF film, you talked about relatively low backward integration, and you talked about several initiatives to improve on that score progressively over a period of time. So if I may ask you, where you have reached on that path? You talked about integrating several components in-house. So some comments on that would be interesting.
I apologize that this information is again we are holding back for some time. But we are, as we speak, we are on that path, and we, like a company, as we said, 100% of the components of Sun Control are manufactured by us from top bottom, because we are there for last 30 years, right? In PPF, we are doing a lot of, again, this will be pretty sensitive for our customers also. So I won't be able to answer in this forum.
But you are making progress. Is that qualitatively, if you are able to comment on it?
We have a team of 50 people in R&D who continuously work on all kind of things, and the leadership is very strong under Mr. Arsul and the entire team. There is a very strong momentum in terms of new products, R&D for each and every product. We have many variants and we keep on doing that. And this is a testament, like last year we launched so many products, like 6-7 products we launched successfully in the market and getting good response. So this is one of the key area which we can't divulge, like how much and till what we can do that.
Fair enough, sir. I appreciate that. Just another question, sir. You have, under the two broad umbrellas of PPF and SPF, you have launched several categories of products, and the presentation is extremely elaborate in terms of the details. Just one thing, would your say near-term diversification be under the same umbrellas, or are you also considering a completely new vertical, if I may use that term?
See, one thing as guidance and the company legacy under Dr. Garware, we are committed for backward and forward integration. And that too will be very much, that will be, I would say, in our core areas only, right? So we won't go into something which is not related to our polyester business or PPF business. So yes, we are looking all in a way so to make it like I keep on explaining this thing that we are not probably actually the only company in the world which is fully backward integrated. Means we buy petrochemicals, then we make our own resin, then we make our own films, These films then can be thermally laminated, can be metallized, can be deep dyed, can we go to different kind of laminating processes, and can go to like many liners, these things, plus our coatings are top coats everywhere, and the adhesive. Everything we manufacture, even in the countries, advanced countries like USA and in China, you will find people buying all those components from outside. So Garware is the complete package which is end-to-end manufacturing in-house, right? That gives us a very strategic advantage as compared to our competitor, and very high quality because we can monitor and control whatever is required by our esteemed customer.
Sure. Thanks very much and very best wishes for continued good performance.
Thank you. Thank you very much.
Thank you. Ladies and gentlemen, in the interest of time, may we request participants to limit their questions to one per person. Should you have a follow-up question, we would request you to rejoin the queue. The next question is from the line of Parikshit Kabra from PKD Advisors LLP. Please go ahead.
Hi, thank you for the chance. Just one quick question. The growth, particularly in PPF but also in SCF, are you expecting that to be majorly volume driven or a mixture of volume and price?
For growth is a mix of both because we let me tell you very frankly, we can sell the product, we can fill the line anytime with all the products. But when you talk of sun control, there are very basic single ply product, means you just make a product and do like adhesive and small kind of coatings and then sell into the market. Whereas you find the Garware product, they come with a lot of value addition to that. There are nanoparticles on that. There are many different kind of scratch resistant and all those coatings. So the quality of the product, we like pride in our value additions in the product. So we always try to focus and educate customers to use the products which are having high quality heat rejections and best in class light transmissions, like without affecting any transitions and without having the lowest possible absorption into the film. So these are the parameters which we try to focus. So of course, the more sales and marketing efforts are towards like the quality products which actually enhance the experience of the customer.
Right. So, sorry, will it be possible for you to give some kind of a breakup as to how much of the 30% growth would come from price versus volume?
See, definitely it will be a volume only because we can't change our current mix to increase with increase of the prices. So there will be a mix of that. What I'm trying to say is the volume will increase, but that will increase only in the high-end products. That's what I meant to say. Product mix. We will do better product mix.
Overall price will be higher, right? Because the products are selling more.
Product mix will be higher.
Thank you. Thank you.
Thank you. Thank you.
Thank you. The next question is from the line of Ankush Agrawal from Surge Capital Limited. Please go ahead.
Yeah, hi sir. Thank you for taking my question. So just one quick question. So for the full year FY'24, can you share how much of our PPF business was white label?
You are talking specifically to PPF?
Yes.
See, we maintain that number to 50-50 for us and the market. Like there is some plus minus 10% always happens, so that is in line with that, like 60-40 or 50-50 or 40-60 in that case. We intentionally try to maintain our branding along with our big capacities, which are world's largest facilities, to maintain our growth.
Right. So would you be able to qualify, say, on the white label side, the majority of the business is coming from, say, how many customers, like 4 customers, 5 customers, 10 customers? Obviously, there would be a long tail of customers, but majority would be driven by a limited set of customers, right?
Long tail of customers, but if I say like equally or a distribution will be like around 10 customers who will be like pretty with the volumes, with higher volumes.
Got it. That was all. Thank you.
Thank you. The next question is from the line of Kashyap Karthik from Table Tree Capital. Please go ahead.
Hi, good morning. I think most of my questions have been answered. The only question that I had, sir, was one of your global supplier cum competitor cum customer recently had very bearish comments on the U.S. economy and the growth they are seeing in the U.S. and obviously China as well. Right? So, I'm very pleasantly surprised to hear that you continue to maintain a 2,500 crore guidance by FY'26, which basically implies a 20% growth, year-on-year growth, year-on-year from this year on. So, from a U.S. perspective then, are you seeing the global brand sales or any white labeling sales that's slowing down, or it's just the commentary from that particular player alone and we don't see any impact?
When we talk, if we compare the numbers for the same quarter, which was his quarter one versus our quarter four, means Jan to March, you can see our performance that has been robust, and that will continue. However, there were concerns on, I could see even the Tesla's commentary and the Nextwell commentary, then some other people have these things. But the good thing about us, like we are a very wide range of products, and they, make up for one another. So that's how we are maintaining our guidelines to be stable and original guideline of 2,500 crore to be met by FY'26. So that is the reason, like we have like very wide variety and we are seeing good growth on some segments, intentionally put a lot of efforts towards, as I mentioned, about architectural segment and this thing. So even on PPF, when I saw the guideline, there was a big drop in Q1 numbers from that particular customer, but they have given 8 to 10% guideline for the rest of the year. That means the growth is still coming to them. If I just went to that guideline, and that was also positive. Only thing is they reduced it from 15% to 8 to 10%. Despite a big drop in Q1, they are still maintaining that 8 to 10% guideline for the year.
Got it. And one last comment, sir. I know you've answered it before, but we have about 400 crore cash, another 220 crore or 240 crore will get added this year. So you'll end up at around 640 minus about 120 of capex, right? So you probably have more than excess of 500 crore cash at the end of next year. Request the board and the management to consciously think. I know there's a lot of sales, marketing and product development expense, but we continue to give 10 rupees dividend year on year for many years, but our profits have doubled or tripled, right? So request the management and the board to consciously increase the dividend paying rate from 20 to at least 20 rupees because you have 500 crore cash at the end of next year.
Yes, we have noted your point, sir. We will come back to you.
Sure. Thank you.
Thank you. The next question is from the line of Parth Jain from Niveshaay Investment Advisory. Please go ahead.
Hello, sir. Congrats on the good set of numbers. Sir, just to clarify, you mentioned that we are dividing our department into architecture films and automobile films. So within the consumer products division, we'll be seeing that as 3 separate divisions, like automotive films, architecture films, and the PPF. Is that a fair understanding?
Honestly, this is an internal division to create a big focus towards architectural segment. Like I said, we had yesterday also one conference of the West region. So, because the business and SKUs are so big on architectural segment as well, so we have divided the team to put dedicated efforts towards sales and marketing of architectural segment. So we will continue to show CPD and IPD, but we will let you know the performance, like how that is doing. But absolute numbers won't be, we can't give absolute numbers. Again, there are a lot of information which we will try to keep it's a good value for you guys also, that we will continue to grow without giving our competitive advantage away from us.
Okay, sir. Thank you for the clarification.
Thank you.
Thank you. The next question is from the line of Aman Vij from Astute Investment Management Private Limited. Please go ahead.
Good afternoon, sir. My first question is on PPF domestic business. So given now we have this titanium range, and this will be now available for full year, what kind of growth do we see for PPF domestic this year?
So, PPF growth, if you compare, we are keeping it at around 20%, like the general guideline for all the, that will be in line with other product. Initially, there was a big jump because the base was low. Now we see around 20% growth with immediate effect. 20 to 30, I would rather say.
This you are talking about domestic business.
No, I'm talking of overall. You are talking, you asked domestic? Yeah. Domestic business is, that we may be slightly above that.
And even for overall, on this big base of, say, 450 odd crore sales, we are expecting to grow 20% for the full year.
Yeah. We can, yeah. From there, it will be like somewhere around 20%.
Yes. If you can give rough idea in terms of how dependent are we on US and China market and even Europe market. So out of our overall sales in PPF specifically, how much does US, China and Europe contributes? And in which market are you seeing strong growth for this year and which markets may be relatively weak growth?
See, overall our sales, as we said, 46% of our total business is coming from North America, right? So it is, we can't say that we are not dependent. We are definitely dependent in a big way to North America business. And that includes like even IPD business contributes good there. And then CPD and PPF and Sun Control, all the businesses. But to be honest, we are not seeing the kind of concerns has been raised by the shareholders about special guidance to the US market. We are seeing continued good momentum in that market. China exposure, if you really see, we have hardly any China exposure. Of course, some of our, we have like a big volume going to China from IPD division. But that is again, there is no decline on that. It's a steady business which we are seeing for many years. And there is hardly any, it's not percentage-wise, it won't affect much to us.
Thank you. We move to the next question. The next question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Thanks for the follow-up again. So one question I had was on the CPD division. We touched almost 1,100 crore revenue this year. So out of that, how much is India contributing currently, and how do you see India becoming us for how do you see India growth over the next 2 to 3 years? We're just starting out in PPF. I think SPF also. This the new product that we have developed for automobile and the architecture films launch. So how much is it currently contributing India in SCF revenues? CPD revenues, and how do you see this this segment over the next 2 to 3 years, especially for India?
CPD in India. Just a second, I'm just looking at the numbers. So the current, if we talk, this is around 15% revenues on CPD division come from India. 85% is exported, right? However, that number, if you really see, was like much lower for India market. But again, with the outstanding growth from outside also. So actually, we are growing on both ways. Like India has been outstanding, but at the same time, we are seeing a continuous growth from other territories, and we have added additional resources everywhere to increase that business. So we can say it will continue like 15%. Despite the good growth, it will, because the other geographies also growing. So 15% is the roughly we achieved, and it will continue to do so. And there will be a growth, definitely a big growth, but that will offset by the growth on the rest of the world also.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. A. Venkatraman for closing comments.
So thank you very much for attending the call. Trust we clarified all your queries. If you have still any queries left out, please reach out to us through an email provided in the investor presentation file. Thank you very much. Have a great day.
Thank you. On behalf of Garware High-Tech Films Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.